Hello and welcome to the Commercial Real Estate Talk podcast. If you're a first timer, thank you for tuning in to this weekly look at commercial real estate. This is episode 131. We track commercial real estate so you can focus on your business. We've entitled this Tom Brady, Miami Office. Tom Brady, Miami Office. It's no doubt that Tom Brady made Miami his home after his playing career because the Dolphin Stadium was like a home stadium to him, the way he pounded the Miami Dolphins for 20 years. So welcome, Tom Brady. He's moved into an exclusive neighborhood. We'll get into that. There's a lot to talk about, as always, and just a couple of housekeeping things. If you haven't kept up with us, if you're listening, we have this on YouTube now. Commercial Real Estate Talk channel is how you find us, or at CRE Help. We also have shorts. We're up to 13, 14 of these where we explain commercial real estate in under 1 minute. I was just with a client who asked on a proposal, what is an SNDA? And it was a wonderful time describing what that is. But we actually have that described in 1 minute on CRE Shorts, Pound Shorts. So please subscribe, help the show, give us some thumbs up. It tells the YouTube algorithms that this is worthy of sharing with others. So thank you so much. We're going to get right in. Let me move out of this screen here and go right into our news articles. As we said, we're going to talk about Tom Brady and this beautiful new office that he has. But before we do that, we could have easily called this the office sector woes because office continues to dominate the news with bad news. But we've had some good and bad news this week. But this first article comes to us from BizNow, and we want to talk about these foreclosures surge as some investors call bottom. Others say pain is just starting. So here's what's happening right now in commercial real estate. You have funds that have been sitting on the sideline, not investing, while you have others who are struggling to stay alive, needing funds to stay alive. And foreclosures are starting to happen. Sales are starting to happen. I have an example in our next article of real estate selling for a fraction of what the previous or the current owner paid for it. And so foreclosures are happening. Commercial property, reading from the article, commercial property owners are losing their properties to their lenders at the highest rate since 2015. A sign that the chill in transaction markets could be starting to thaw. During the second quarter, $20.5 billion worth of office, multifamily, and other property was seized, up 13%. So $20.5 billion of property. That's where lenders have already tried to do workouts, buyouts, pretend and extend with their investor, with their REIT, with their property fund, and the lenders just said enough is enough. We're going to take this property over. Now, remember, commercial real estate deals usually is 30, 40% down. So when a lender seizes an asset, immediately their equity position is a lot higher than the investors in terms of they have 60% in the asset. So now the asset's been devalued, that equity piece of the investor. I don't know if that made sense, but $100 million building, and someone had to come in with $40 million of cash. The lender has $60 million. And so here's what's happening. The lender's saying, okay, these guys are so far behind. The market is so in the tank. We're going to take back this asset because you know what? The building actually works at $60 million. We could make the numbers work at $60 million. The investor with the $40 million in equity plus the $60 million can't make it work because the property is no longer worth $100 million. It's now worth $60. So investors are deciding it's time to start foreclosing because we can probably get this asset, stabilize it, put it to auction, and break even or maybe make some money. So investors are looming in. Let's continue. In times of distress, such surges of foreclosures activity have historically been followed by market resets. Lenders who don't want their properties on their books sell the real estate and set new comparisons for the rest of the market to adjust to. Again, a new sale is going to trigger the market comps. So when a foreclosure happens and then they put that property in auction, all of a sudden, like this is happening in Coral Gables right now, and I don't have this article up there, but there's been two recent sales in the last, say, 18 months that property sold for tremendous losses, sub $200 a square foot. And there's a lender of a Class A tower looking at, it's actually two buildings with a garage. There's a lender who's looking at it, and the debt on the property is $67 million, which is $267 a square foot. Well, a Class A building just sold earlier this year for under $200 a square foot. So the lender has got some decisions to make because the investor is 90 days late on their property. If you're interested in that property and want to talk more about what's going on in Coral Gables, please hit us up at blueboxre.com. That's how we pay bills. Blue Box Real Estate's an independent commercial real estate firm in South Florida who specialize in tenant advisory, landlord advisory, and investment sales. So please, we're doing more and more of the investment sales, combining all of our experience and market know-how with our list of investors and clients that we've worked with over 30 years. So if you're interested in anything that we talk about, please, a good reminder to connect with us. All right, let's keep going. Lenders are more dispassionate about values, and that's a sign of cycle moving towards bottom. Matt Pestronk, co-founder of development firm Post Brothers, told Wall Street Journal. However, loan maturity dates creeping up indicates borrowers, especially debt tied to office buildings, have more pain in the forecast. More than $94 billion of commercial real estate debt was in distress at the end of June. Another $201 billion is at risk. Well, I just told you about a $67 million at-risk 90-day late debt in Coral Gables. But if you combine them all together, we are talking about $94 billion that's actually in distress. Those are loan payments that are behind, and $201 billion that are at risk, probably gauging where the market has turned. The growing amount of bad debt has banks preparing for the battle. Deutsche Bank increased its loan loss provisions in the second quarter as its average loan to value of its U.S. office loan portfolio reached 81%. Blackstone Mortgage Trust slashed its dividends to allow it to deploy more capital and reduce office exposure. Last month, Rudy's agency placed 6 regional banks under review with potential for ratings downgrade due to the office and other commercial real estate exposures. That's the majority of the article there. Now, here's an example of what they're talking about from Globe Street. LA firm scoops up San Francisco office at 80% discount. 80% discount. There was another article we could have easily talked about that this is going to be the biggest boon for commercial real estate. If you are a fund, if you've had dollars sitting on the sideline, now is the time to go shopping. In fact, the Fed is talking about lowering interest rates. The UK just saw lower interest rates the first time in 4 years. So when that starts happening, I suspect you're going to see a buying frenzy. So right now is the time to be knocking on doors. In fact, that's what I'm going to do as soon as I hang up on this podcast. A buddy of mine, we're both independent. We're going to get together and we're going to start calling property owners and figure out where the deals can be made. Okay, so here, let's get into this. Los Angeles-based BH Properties has been busy acquiring properties in the Bay Area in the past year, including University Campus in Oakland Hills and retail complex at Fisherman's Wharf. Firm now grabbed its first San Francisco office assets at a huge discount. BH is acquiring 117,000 square foot downtown office building, 989 Market Street, that was headquarters to the software company Zendesk. The price for the half-empty building is $13.5 million. That's like $10 a square foot, right? Or less. Actually, my math is off. $115 a square foot. Well, that doesn't add up. I'll run the numbers later. $115 a square foot for a San Francisco office building. That's 80% less than $61.3 million the owner, ABS Real Estate, paid for the 6-story property a decade ago. You don't want to know how you're going to lose a job when you buy an office building for $61 million and then you sell it for $13.5 million. So, again, what went in behind this? Your guess is as good as mine. But that's just one example. Here it talks about Zendesk, the tenant. Again, it's all about tenants. It's all about work from home. It's all about tenants downsizing, not needing more space. There's not that much demand. Supply is building up. The loan-to-value ratios on this commercial properties are starting to come down, and foreclosures are starting to happen. Zendesk moved into the mid-market office building in 2011. Software firm recently inked a deal to sublease 40,000 square feet from Meta. It is not clear whether the company intends to maintain an office footprint at 989. Yeah, you think? I don't think so. Probably not. So it last sold for $523 a square foot, and now it's sold for $115 a square foot. So you see what we're saying. Folks who have cash on the sideline are looking at how can you buy land in San Francisco downtown and build a 115,000 square foot office building at this number, $115 a square foot. Not going to be able to do it. So there's going to be deals out there. What they do with the building now is anyone's guess. Do they convert it? Do they shell it? Do they convert it to a hotel, apartment, or do they just reintroduce this at such a low cost basis that there's going to be another tenant that says, yeah, I'll lease that space. I mean, when you buy an office building for $115 a square foot, you could lease it for $20, $25 a foot in San Francisco and make money. Who knows? They got a lot of leverage now for the property. Okay, office sublease. And a little bit of good news from Globe Street. Office sublease vacancy drops for the third straight quarter. Overall, market continues to lose occupancy driven by tenants downsizing and expiring leases. The office sub-market has continued to thin, with vacancy declining for a third consecutive quarter and edging down 3% of existing sublease inventory. JLL said in its Q2 24 Markets Dynamic Report, office sublease vacancy fell 144 million square feet. Now, here's my guess. Haven't read the article. We're going to read it together. The reason I think is because these leases are simply expiring, right? These are subleases that have been on since 2021, 2022, 2023, 2, 3, 4 years of term. And it's just the natural cycle. The leases are now expiring. The tenants are able to now pivot and take smaller space. That's my guess. Let's see. Higher quality subleases have attracted new tenants quickly. More than 75% of subleases signed in the second quarter were listed in 23 or 24, despite comprising nearly 40% of all sublease activity. Sublease absorptions reached the highest level since the pandemic, with 5.8 million square feet of subleases signed. While the level of new sublease inventory coming to the market has dropped by a third compared to the first half of 2023, spec suites and other kinds of pre-built spaces and high-quality sublease listings are leasing quickly as tenants seek to avoid upfront cost. That same dynamic, tenants prioritizing low capital options when committing to space drove renewals and extension. In fact, taken together, renewals, extensions, and subleases comprise 2/3 of office leasing volume in the last year. So listen, if you're listening and you don't know what a sublease is yet, please, at Commercial Real Estate Help, at CRE Help, Commercial Real Estate Talk channel, maybe I'll make that the next short. What is a sublease and how can it benefit you? Because you have three big benefits, maybe two: subleasing space and a caution. Number one, the ability to open quickly. So you're a new-to-market tenant. You're coming in from New York to Miami. You need a 2,000 or 3,000 square foot office because you need to hire folks right away. You can either go to Regus, Spaces, one of these co-working groups, and just pay tons of money for a year lease and a single office. You're going to cram 2 or 3 people. But you say, you know what, I'm hiring key executives. I'm hiring folks that need to have a nice office. But I don't want to go out there and shop for furniture and get permits and open in 6 or 8 months and go through that. I'm in New York. They're going to be down there. I need something quick. Enter the sublease market, right? You get speed to open. And not only speed to open because the space is built out, but it's almost always furnished. You're taking advantage of someone downsizing. And when they downsize, inevitably they don't need their furniture either. So you get to go in quickly. Second huge advantage is rate. Usually subleases are anywhere from 10, 15, 20. I've seen them as high as 25% discounted from where the property is. Look at let's go to 801 Brickell or 701 Brickell, and these buildings are at $140, $150 a square foot. Well, you might find a deal, someone who signed a 5-year lease in 2022, and so they've got 3 years of term remaining. In 2022, rates might have been $70 or $80, and now they have the ability to lease you their space at that same rate, and you're 40, 30% off. Now, caution, because some landlord leases do not permit that. Some landlord leases require that you sublease at the market rate, or the landlord has a say. The landlord can come in and say, I know you're paying $70, our building's at $140, you can sublease it at $120. So if you're a tenant looking to sublease, please take a look at your lease. We'll be happy to do that for you. So second huge advantage is the rate. You usually have tremendous savings. So speed to open, tremendous savings. And then, of course, typically you have a shorter term. So that's great if you're new to market and you want to get up and running and test the waters, test this building, test Brickell. Is downtown? Is it Coral Gables? Is it Las Olas? Is it Boca Raton? Wherever. Is this the market we really want to be in? Sublease gives you typically 2-3 year terms and the ability to pivot if you decide not to be in that market. So those are all benefits of subleasing. Now here's a tremendous caution, because I've seen it, I've experienced it with clients, is your sublease is only as good as the strength of the master tenant. So if your master tenant is downsizing because they're a big corporate user, they're Apple, as we read over here, what was this? Zendesk sublease from Apple. Okay, well, Apple's not going anywhere. So if Apple signed a 10-year lease, 5 years in, they decide they don't need the space, they're not going anywhere. You're going to pay Apple. Apple's going to pay the landlord, and you're fine. But if you're subleasing from ABC Corporation, that was their first office lease, and they've only been existent for 5 years, and they're 2 years into a lease, and they realize they can't afford it, caution. You might go in there thinking you're getting a great deal, only to get a letter or eviction notice on the outside of the door in a few months, because while you were paying the master tenant, they weren't paying the master landlord. and now you're facing an eviction and having to go through this whole process of finding space again in a rush, in a stress environment. So it's very important when you sublease space that you take into consideration the strength of the master tenant. In fact, years ago, I was representing a healthcare company, and we spent more time, we were the tenant, we spent more time vetting the master tenant, reviewing their financials than they were reviewing ours, because we wanted to make sure there was 5 or 6 years of term left, that they were going to be around for it and good for it, and that there wasn't going to be any shenanigans, because we wanted to make sure that, in fact, if I recall, it's all coming back to me now, we were requiring them to give us a letter of credit, bridging the gap. So, for instance, we were leasing the space, let's say 20% below market. We were requiring them to put that 20% margin in a letter of credit, in a bank, freeze it, so we know that that's going to the landlord. And if they default, that we had that to tap into so we can take over the lease and pay the market rent. So, again, I'm not saying you're going to be able to pull that off if you have a 2,000 or 3,000 square foot tenant. In this case, we were 20,000 feet. But keep in mind, 2 great benefits: speed to open and sublease, usually below market rate, but a caution: your sublease is only as strong as that master tenant, so do your homework. All right, so subleases are coming down. That's probably more of an indication, as I said, that it is having to do with folks being able to free themselves of the leases finally, and we're going to see more and more of that in the next 2 or 3 years. Again, remember, a 10-year lease that was signed in 2019, ouch, right? You had the pandemic hit the next year, and you still got 5 more years of that lease. The world changed. The decision that you made in 2019, 2017, 2018, 2019, 2016, 2015, 2014, 10-year leases in 2014 are now coming due. The world has changed. Work from home, pandemic, inflation, you name it, cost of living, everything has changed. And so, again, a caution. You better really know what you're doing if you're going to do a long-term lease, because who knows what's going to happen in the next 10 years. Okay, so listen, well, here's what happens in down markets. It's musical chairs in commercial real estate. And in a market like South Florida, believe it or not, Miami, we get a lot of news. We're growing, we're exploding, folks are moving down here, but yet the commercial real estate market is still a small group, especially experienced folks with institutional and Fortune 500 companies. It's still a very small, kind of exclusive brokerage group. And so what happens every 3 to 5 years is you see musical chairs as this company attracts this company, and it's just this director flies to here and this one goes over there. In down markets, that happens even more, because you got to do something. You got to justify your existence to your investors and keep those stock prices up. So it's not a surprise. Here's an article from BizNow. It's poaching season for big CRE brokerages in South Florida. That's, whether there's a down market, up market, pandemic, not pandemic, as I said, it's a 3 to 5 year cycle, and I'll explain. Here's why. Because if Newmark wants to hire, or JLL wants to hire a team from CBRE, they have to give them a big check, a big signing bonus. And what they're assuming is, we're going to give you $1 million to come join our company, and we're going to make it back because you're bringing all your business. But in exchange, you've got to sign a 5-year, 3, 5, I've heard even as long as 7-year contract to join us. You can't leave. If you leave, you got to pay back proportionally what you owe, or you have non-competes and so forth. And by the way, signing non-disclosures and non-competes, this is legal in America. So Cushman, Colliers, Avison, Young, Savills, they're all poaching, which means that all these 3 to 5 year contracts have come due. Maybe a lot of these were signed just before or after the pandemic. And now that they've expired, the brokers are like free agents, and they're able to run around and find the best next deal. And this article points it out. A war for commercial real estate talent is brewing in South Florida. 4 major brokerages, Cushman and Wakefield, Colliers, Avison, Young, and Savills, have replaced or appointed new executives to run their South Florida operations in recent months. In announcing the hires, all the firms highlighted a push to recruit top talent. Here's a quote from Donna Aboud, who left Avison Young to did she go to Avison? She left Avison Young to go to Savills. I see real movement taking place right now among brokers, the actual producers, and really strong brokers, said Donna Aboud. Recently recruited vice chairman and co-head of Florida region at Savills. They want something different today. Aboud is looking to poach some of those brokers to fuel Savills' expansion in the region, but so is nearly every other major brokerage in the country. The shift of brokerage south is not necessarily new, but local leaders said it was supercharged by the rapid growth of the region during the pandemic. While the migration has waned, South Florida commercial real estate continues to outperform much of the country. Every broker wakes up in the morning scratching their head and asking the question, is this the percentage that I'm giving back to the house worth it? Is the percentage that I'm giving back to the house worth it? Pike Riley asked, who started Iverson Young's presence in Florida in 2012 and grew the firm to 200 local staff before semi-retiring in 2021. Brokers are known to more likely hop firms when the markets get frothy and uncertain. The nation's largest brokerages are making their pitches around South Florida, hoping to steal away top-performing brokers and teams with experience in the market that has shown remarkable resilience. Oh, yeah, hold on. Yeah, hey, national firm. Yeah, no, thanks. Okay, sorry, just dispel any rumors there. All right, we're talking to some big teams and hoping that we get some of them over the goal line. Lisa Jesmer, recently appointed market leader at Avison Young. So Donna Bood leaves Avison Young. Lisa Jesmer moves in. I worked with Lisa. I know Donna. Good folks. Jesmer is aiming to grow Avison Young's broker roster in the industrial space after Wayne Schutz, top industrial at the firm, hired away by SRS Real Estate Partners to launch a new South Florida industrial practice. So SRS is Sperry Van Ness's old group, I believe. And look, this was probably a move for Wayne to get some equity and have more say. But SRS isn't necessarily a big national firm, right? So we'll see how that goes. She is also looking to push healthcare space and grow the firm's retail presence by leveraging recent acquisition of Madison Market's retail division. All right, well, let's go on from Jesmer here. Cushman & Wakefield recently sent a New York executive to spearhead its South Florida operations, Joseph Caridi. Is that Joseph there? Yep. Nope. Is that? No, that's Dustin Ballard. Joseph Caridi was put in that role last month before he found a place to live in Miami, with the firm making clear his job was connect New York firms to South Florida brokers. Okay, it's not that easy. It's not that easy. I've tried. I've got a great connection in New York. Known as New York's sixth borough, South Florida, really it's Miami, and Palm Beach. South Florida has seen significant migration from the Northeast, okay? So that's his role. They put someone from New York down here. Now, I'm going to make a prediction. This usually doesn't work out. It usually doesn't work out when you take someone from out of market and have them run the local market. Miami is not New York. And if you go to blueboxre.com, I even have that quote. What works in New York doesn't necessarily work in Miami. This is a completely different market, You know, I don't know about you, but I get called all the time from New York Stock Exchange brokers. And, man, they hustle. And I've got a buddy in New York and commercial real estate, and he pounds the phones. I mean, pound. That's not necessarily how business is done in Miami. Give me a cafecito. Let's go talk about family. How are your children? How's your family? How's the new business going? How's this? How's your hobby? Hey, let's have lunch next week. Let's have some pastelito. And then you get to talk business. It's about relationships. It's about who you know. And it's not New York. This isn't New York. This isn't about, hey, I only have 3 minutes and you can talk to me as I'm walking from meeting to meeting. No, that's not Miami. So what would be interesting to see, it usually hasn't worked before, but Cushman & Wakefield's sending someone from New York down here to spearhead Miami. All right, put a little pin in that. It is it's August 1st. Congratulations. Welcome to August 1st, 2024. And let's see if we can remember this podcast and see if Cushman & Wakefield's move worked out for them, sending someone down from New York to run South Florida. All right, Collier's recruited, we got Dustin Ballard was named Collier's managing director, market leader for South Florida. He spent a decade spent a decade working the brokerage and investment side in markets Silicon Valley, Los Angeles, and Nashville. Okay. I can't think of more. At least New York is here, right? At least there's New Yorkers who come down here, and Mr. Caridi's role is to kind of keep that funnel going and maybe introduce Miamians to how business is done in New York. Maybe that makes some sense, but California and Nashville. All right, Colliers, I wish you well on that, okay? Look, I've seen folks, like I said, I've been in this business since the mid-'90s. There's Lisa Jesmer, and that is Mr. Caridi. There's Mr. Caridi. folks, it just doesn't work, in my opinion. It doesn't work. And I'm going to give her props because she deserves it. But probably the most successful in my tenure market director for a national firm, it was Cushman & Wakefield 5-year run with Terry Blanca. Terry Blanca. Do you understand? Terry Blanca from South Florida took over and grew the firm, and so much so she was able to launch her own firm, and she's, 12, 15 years plus running and giving the big boys a run for their money, so she's to be commended. And that's South Florida, okay? Bringing people from New York, Nashville, California, look, that's how bureaucratic, big government, big institutions, big investment firms decide, and that's why there's plenty of room. Listen, if you're listening to this podcast and you've ever been thinking of being with an independent, there is plenty of room in South Florida to do business the right way and to get to know people and to bring expertise to them. You don't have to be at a big firm to do that or apply what you learned in California, Nashville, and New York to be successful in Miami. And again, we have plenty of examples, and God willing, or hopefully, praise God, Blue Box is one of them. We've been around for over 7 years now. Again, thank the Lord. All right, so there you have it. So you've got, the only one who kind of made a local hire was Don Aboud going to Saville. So here's my guess: Don Aboud will be there 10 years, and I think in 2 or 3 years, maybe plus or minus, Colliers and Avison Young and some of these will be looking elsewhere. Now Jesmer, she's a local hire. Jesmer, I worked with her at JLL. So she's spearheading Avison Young. So I think that'll work. But we'll have to watch Cushman & Wakefield, and we'll have to watch Colliers, who decided to go out of market poaching brokers, and see how that works for them. As you can see, there's a lot more to the article, but we're going to move on to the last article in the title of the podcast, and that is from BizNow. Tom Brady relocates investment firm to wellness-focused Miami office. As I stated before, it's just a natural. This has been home to Tom Brady. He pounded the Miami Dolphins for years. It's only natural. He wants to move down here. Who wants to live in the Northeast when you can be here in the winter in 70-degree weather? So Tom Brady is down here. I think he liked Tampa. Now he's here in Miami. When the greatest quarterback of all time looks for office space, amenities matter. Tom Brady's investment firm, TEB Capital Management, has signed an 8,415 square foot lease. That's no small lease. That's a lot of folks. At the Well Bay Harbor Islands, a mixed-use property with wellness focus that is slated to deliver next year. Now, maybe this will mention it, but I believe Tom Brady bought it in the Indian Creek neighborhood, and this is very close to him, and Bay Harbor Islands. It's perhaps the ideal office for Brady, 7-time Super Bowl champion who lives in Indian Creek and is known for his strict diet and fitness regimen. Terra Group, the project's Coconut Grove developer, has partnered with health brand The Well to position the project on the cutting edge of healthfulness. Its 22,000 square foot amenity packages includes The Well Spa, where a $5,000 annual membership grants access to The Bath, billed as Miami's first Roman hot tub, or hot bath, okay. The Saunarium, sauna, and the halotherapy steam room. Are these people ever going to work, or are they just there to be in the spa? That's a good question. There's also the infrared and sound dome with Terra and The Well have described as combining the healing benefits of infrared heat with a therapeutic sound therapy to treat the body at a cellular level, along with a restaurant that will offer sustainable, organic, clean eating options. So all that's happening in here. Somewhere there's offices, but besides all these spas that are happening. The mandate that we got was to find some great office space at Collier's Kevin Gonzalez, who provided local guidance to Teb on the deal, along with Steve Rutchick. All right, well, congratulations. I know both of those guys. The incredible part is that we found one that aligns exactly what Tom Brady is about. Brandon Carnes, the New York-based co-founder of Current Real Estate Advisors, also represented Teb in the deal. The new office is around twice the size of their current space at 1090 King Concourse, comparative relic of an office building built in 1977. I'm sure 1090 Concourse appreciates that comment. Tom Brady is leaving a comparative relic built in 1977. Tab manages Brady's investing and brand deals along with TB12 supplement brands. Brady also has several sport investments, including stake in Las Vegas Raiders, Major League Pickleball team, and British football Club, Birmingham City. The well is among the most expensive in the city, with asking rates at $120 a square foot. All right, but Brady received the GOAT discount. Okay, yeah, we'll see. Now, the lease includes an option to expand across the full floor at the property. Usually that kind of information doesn't get out, so I'm kind of surprised about that. What else is happening here? Indian Creek. Brady is co-tenanting with the neighbor Indian Creek enclave known as a billionaire bunker, where Brady is building a mansion. Amazon founder Jeff Bezos purchased multiple properties in Indian Creek, and e-commerce giants reportedly searching up to 50,000 square feet in Miami. So, look, folks, Miami is here to stay, and where's that 50,000 going to end up? We'll see. There's not really an option in Brickell anymore. Maybe they'll go to Coral Gables or Wynwood. All right, the Well Bay Harbor Islands is 113,000 square feet across its retail, rooftop, 4 office floors with 66 luxury condos. Tab Capital is the second tenant to sign. They had 23,000 square feet lease signed by Dwight Capital for its headquarters, and the 35% leased, according to the article. All right, Blanca Commercial Real Estate. Daddy Blanca represented the building. There you have it. There you have it. And so I know this area well. I leased 1170 King Concourse. So the well's across the street. This was Taplin's former digs, and they bought it, and now they're building the well. 1170 King Concourse. I worked for the Galinsky family doing their leasing. In fact, I'm right down the street at 11900 Biscayne Boulevard if you come over to the mainland. So if you're interested in this area for office, I know it well. I also leased King Concourse, which is just, again, on the mainland off Bay Harbor. So we know this area well. This is one of our back markets, and we are backyard markets, and we're happy to help you if you're listening and are interested in offices at the well or anywhere to do with this North Miami Bay Harbor Island area. Okay, hey, that's going to be it for the podcast. We're trying to rein these in, keep these short and focused. But Tom Brady, welcome. If you want to appear on the Commercial Talk podcast here, Commercial Real Estate Talk podcast, let us know. How much value did you put in all this spa stuff? I can't see Tom Brady hanging out at the Roman bath with other people, but we'll see. We'll see how much time Tom Brady spends in this place, and what the purpose of that office is. Okay, so who's going to be in it? How many people are going to be hired? And so forth. All right, thanks for tuning in. Remember, Proverbs 20:18, plans are established by counsel, by wise counsel wage war. If you want to learn more about commercial real estate, if you haven't visited don'tsignthelease.com/book, you can get a copy to Commercial Real Estate Office Leasing, and I pour 30 years of experience or so in there for your benefit. Learn about commercial real estate, particularly the tenant rep side of the business. And again, please visit us on YouTube and subscribe. Give us a thumbs up. Let us know how we're doing. Leave us a comment. Thank you for tuning in. We value your time. Hope you have a wonderful, wonderful rest of your day and week. Until we talk again, stay strong, and together we'll get through this. God bless.